I think the very first question I want to ask, Eric, is why are some banks and financial institutions starting to take loan applications, and why are some not? What's going on?
Okay, so the SBA just modified this program actually last night. And so Fifth Third has taken the position that we want to make this process efficient. We want to make sure that our customers have quick access to capital. And due to the fact that the guidance was just received last evening, we are delaying taking those applications. We're trying to make this a customer experience exactly what you expect. While we are moving quickly, we want you to know that we're also being very thoughtful to ensure we're keeping your long-term business interests in mind. We want to do the right thing for your long-term needs. Applications will be taken next week. We're going to use an online portal. And so because of the changes, we just felt it was in the best interest to ensure that we get it right the first time, and so that our customers receive the money that they need to get, and they get it quickly.
Let's start back at the beginning. So Eric, describe, if you would, the CARES Act. What's it all about? Okay,
so the CARES Act is basically economic aid due to the coronavirus. So the CARES Act is an acronym for Coronavirus Aid Relief Economic Security Act. Again, I'm sure you have the slide up and everybody's looking at it, but it's a $2 trillion stimulus package, of which they're allocating approximately $350 billion specifically to help small businesses. So it's really to make sure that we keep small businesses up and running, and that small businesses do have the ability to keep their employees employed. So that's really what it's all about.
And the Payroll Protection Program in particular seems to be getting the most attention. So tell us how that's going to work.
Okay, so the Payment Protection Program is getting the most attention. I will also state that there are other programs available that we'll touch on briefly. But what this does is it allows, sorry, my other computer's making a lot of noise there. It allows for small businesses with 500 or less employees to get loans up to $10 million. It's limited to 2.5 times their monthly average payroll for the preceding 1-year time period. This will allow employers to have salaries to pay for their employees, and there are other areas that they can pay as well. So rent, lease payments, things of that nature. But again, the main objective is to keep employees employed, and that's really what the program is about.
So as we kind of walk through this, I know it's small businesses with less than 500. Tell us who can apply.
Okay, so as far as eligible entities, I'm sorry if you hear that noise in the background. I'm getting lots of emails on my other computer, so I apologize for that. So let me just get to the section here that I want to talk about. So any small business with fewer than 500 employees, any small business that otherwise meets the SBA standards, 501c3s with fewer than 500 employees, individual who operates as a sole proprietor, individual who operates as an independent contractor, individual who is self-employed, who is regularly carry on any type of trade or business, 50319 veterans organizations that meet the SBA standards. And then also, as an accommodation for the food service sector, they are allowing for the 500 employee rule to be applied per physical location. So if there is a restaurant franchise or chain, they are allowing for the various chains, the various restaurants to apply, even though in aggregate total they may exceed the 500 employees.
One of the ironies of this is that some of the key small business organizations out there aren't eligible at this point for the program, such as a Chamber of Commerce or the Right Place program or the Better Business Bureau, we can't apply. Even though I just went through the whole exercise of preparing to apply, I'm not going to be able to. But if you can, almost everybody online can. How do they do it?
So as far as the application process is concerned, we at Fifth Third are going to be utilizing an online portal, and that is one of the reasons that we are delaying the process until we can get that online portal available and up and running. On slide 11, there is a sample application that's out on the SBA website, so you can go out to sba.gov. I would encourage you to do that so that you can get a general idea of the information that you're going to need and the questions that would be asked of you. But that is what's going to be required as far as just the basic information, all about your business. There's a bunch of yes and no questions that you'll need to answer as well. You'll need to provide documentation as far as calculating what your payroll costs were. So salary, wage, commissions, similar compensation, payment in the form of cash tip or equivalent, payment of vacation, parental, family leave, medical, sick leave, allowance for dismissal or separation, payment required for provisions of group health care benefits, including insurance premiums, are also included. Payment of any retirement benefits are included. Also, payment of state and local taxes assessed on compensation employee, that's going to be included in there. So that's the type of information that you're going to need. And again, like I said, for our purposes, we are going to have an online portal, and once that's up and running, we're going to just need some basic information as well about when your business started, what the annual revenue is, common information like the business mailing address, owners with 20% or greater ownership. Financial records, we are going to need to have financial records for your business as to how you calculate your average monthly payroll for the last 12-month period prior to the application. And as far as that information, take form as information that if you have a payroll processor, you can get those records, payroll tax filings, Form 1099 miscellaneous, any bank records that you may have, income and expense from a sole proprietorship, which would be on a personal tax return. If you don't have those types of supporting documents, bank records, anything that would be sufficient to demonstrate the qualifying payroll amount. And very important that we have that information to validate what you're applying for. I will also say that as far as the forgiveness, and that is one of the parts of this program that is extremely important, is that 75% of the loan amount needs to be going towards payroll. And so if you take that allocation of funds and utilize that, for a greater amount, so say you prepay your rent expense or something like that, you might get in a situation where that part of the loan may not be forgiven. And so it's very, very important that the whole purpose of this is to facilitate keeping your employees employed, and that's really what the intent and the spirit of the program is.
And it's pretty essential, isn't it, from your understanding, Eric, that the businesses use really accurate numbers that they can back up, because if they don't, they might find themselves later on the wrong end of a relationship with some entity that's going to be checking out their numbers.
That's correct. As far as the application, there is an attestation that the business owner will certify that information is correct, and that is a accurate representation of what the average payroll was prior 12-month period. And as far as our financial institution, it will be our responsibility to also double check the accuracy of that information. So that will be quote unquote, the safety net to make sure that the numbers make sense.
I'm sure there's going to be a lot of questions about this particular program, but before we go to those, let's talk about the other COVID-19 related small business relief loans. Tell us about those.
Okay, so there is the SBA Economic Injury Disaster Loan Program, so the EIDL, and that really provides for small businesses to get working capital up to $2 million. And so if a business is not closed but is having a temporary loss of revenue, they can make application for that particular loan, and payback on that would be based over a 30-year amortization. For-profit businesses, interest rate tentatively, and obviously all this is subject to change. This is a very fluid situation with the SBA. For-profits is 3.75%. Nonprofits would be 2.75%. So that is a program that is available for a company that might be seeing delay in collecting their receivables, or maybe sales are down just due to the fact that there is economic uncertainty at this point in time. So again, that's another type of credit facility that would be available. Another type of program for those of you that already have an SBA loan, whether it be a 7A, and that's a type of loan, or a 504, the SBA is going to make payments for the next 6-month period. So any loan that you either currently have, or if you apply for one or are approved for one prior to September 27th, the SBA will pay principal and interest for a period of 6 months. So again, that's a very nice program that's going to defer those payments for the 6-month time period. And if you do have them already in place, it'll defer those for a 6-month time period. One of the things that I will mention as it relates to that, if you are set up on an automatic payment program, you will need to turn that off, or else the payments will still be taken out of your account. So that's very important that you do that. And if you wish to continue to pay, you can do so if you don't need that deferral. But if it's set up on an automatic payment, you need to turn that off. And after the 6-month time period, if you want to go back on automatic payment, then you'll need to reinitiate that automatic payment program. So in addition to that, there's the Express Bridge Loan Program. And this is for somebody that might be applying for the EIDL loan, and they need $25,000 quickly to meet current obligations. And that is a way to expedite getting that while your other loan application is processed. Quick turnaround, and once the EIDL loan would be approved, then that would pay in part or in total the bridge loan. So that would be another type of credit facility that would be available as well. One last see here. On the EIDL loan, and again, I apologize, kind of jumping around here. There's also, if you're applying for that, there's an emergency loan that you can get for $10,000. All of this is available, I would add, on the SBA.gov website. So it's a loan advance of up to $10,000. So that businesses, so they can get that if they can relieve any current financial experiences that they're having.
So Eric, you've been in business banking for a long, long time. How would a small business person figure out which one of these loans is the smartest way to go? How do you do that?
Well, and again, it really depends upon what your particular situation is. Number one, hopefully everybody has a relationship manager, business banker that they're currently doing business with. So I would first encourage you to reach out to that individual to discuss your particular situation. But above and beyond that, the PPP program is really for businesses that might be closed at this particular point in time, and they can't make payroll. and they want to keep their employees gainfully employed. And so we anticipate that will be the program that has the most applications. But other than that, if you're in a business where you're still open, you're still either manufacturing a product or providing a service, and you're just seeing a slowdown due to the fact that we're kind of stay at home and people maybe aren't buying your product or utilizing your service, then one of the other programs might be better suited for you. So again, I encourage any and all parties that are dealing with this situation to reach out to their banker, because they'll be able to have that dialogue and just be able to advise them appropriately.
Is there any way of knowing, because I know there's a lot of small businesses out there that are really in a bit of a battle right now, they're in a real cash crunch. Is there any way of knowing how quickly, if you apply today for this payroll protection loan, how long it's going to take for that to process and for you to actually get the funds that you're applying for?
I wish I could tell you I knew that answer. Unfortunately, I do not. I know that last year for the fiscal year for the SBA, they did $30 billion for the whole year in loans. And the first tranche of funds that are being allocated for this are $350 billion.
So it's 10 times as big as the last year.
Correct.
Wow.
So that's one of the reasons that we chose to hold off to do the program, because we want to make sure that we have all the details in place, that we have the systems in place, so that we can do this in the most expeditious manner possible. I do know that other financial institutions are taking applications today. I don't know if they're processing them today, but they may just be taking applications. But I can't speak on behalf of other institutions what their process is at this point in time.
Yeah, I think they're building the plane as they're flying it on this one, huh?
That's probably true. That's kind of what we're doing. Like I said, and you're aware of this too, as far as the presentation material, the sample application that we had in there yesterday is now different today. So it was changed as of last night.
So if we could walk back on the interest a little bit, and in real quick terms, Eric, what's the interest obligation on the Paycheck Protection Program? If someone applies for it, how's that going to work?
Okay, so the ultimate goal will be that the total loan will be forgiven because it's utilized for payroll. 75% of it will be utilized for payroll for employees, and the remainder could be used for the other eligible charges. There'll be no interest. In the event that the funds are not allocated as such, then it would be a 2-year payback at 1%.
Which is unbelievable. What an opportunity.
Yeah, that's pretty low. I'm not advocating that people use those funds for other purposes when its intended purpose is really for payroll. But in the event they get into that situation, it would be a 2-year payback at 1%.
And the categories of businesses that are eligible, it's pretty broad cover. I mean, they're trying to make this as broad a cover as possible, except for our particular business category, which is business associations. But in general, it's most any 501c3 nonprofit, 19, which is a veterans organization, I think. And then, you look up there at the, I don't know if everybody can see that top check one. Those are the people that are eligible.
And it's literally just about, and with the exclusion made for the Better Business Bureau, but just about everybody is eligible for this. And it is geared for small businesses. And there is not a revenue component to it. It's basically an employee component. So 500 or less employees. And even with that, if it's in the hospitality industry, there's an exclusion for that as well.
So one of the questions that a participant asked prior to this, and I think we may have covered it, we may as well reiterate it, and this is the specific question, can customers charge cancellation fees like hotels, rental cars, conference expenses, and air travel that ended up having to be, they just had to eat that loss? Could it be used for those purposes?
Okay, I don't know if I'm understanding the question correctly. So if the employer or the employee had those costs incurred?
I'm going to reread it. Can customers charge cancellation fees like hotels, rental cars, conference expenses, air travel expenses with the loan money? So in other words, they had booked something and then they had to eat the loss on those particular kinds of expenses.
Those would not be considered normal payroll costs, and it's not defined anywhere in here that those would be applicable for this particular program.
Could they use the loan money to bring back employees that they'd already let go?
Absolutely, yes. That's the spirit and the intent of this particular program.
I can't see any of the other questions, so I'll ask somebody else to chime in who can if there are other questions being asked, because I can't see them.
Yes, Bill, we have a number of questions. One of them is, and I apologize here, I'm reading this as we come in here. Are we required to sign up for the 6-month SBA payment of interest and principal, or is it automatic?
Okay, I'm assuming they're talking about the deferral on the SBA.
That must be what they're talking about.
Yeah, so that is automatic. The only stipulation that I indicated on there is that if they are set up with an automatic payment with their lender, they need to cancel that, or else that payment will come. But other than that, the SBA has indicated, and it is clearly outlined on their website, www.sba.gov, that they will not be taking payments for the next 6 months. And if a borrower chooses to make those payments, they can do that as well. But they will not be taking payments.
Once we submit our application, and if it gets accepted, can we deny acceptance of the funds if our business forgiveness circumstances change?
Absolutely. So if they get approved, and before the funds are deposited into an account, or even if the funds are deposited into an account, they can immediately pay it back.
What period of time does the 12-month payroll period cover? 2019 annual or some other different time period?
The payroll period is and it depends on, for a non-seasonal employer, it would be for January. Well, hang on here. I want to make sure I give you the accurate information.
Yeah, because you're looking, I think the guidance I got this morning as I was going through the spreadsheets was they used our 2019 payroll, but then they added in some data from the first quarter of 2020 for some other calculation. But I think for the payroll,
it is for 19, and then the other calculation is for seasonal employers. So for seasonal employers, it's 2 times the average monthly payments for payroll costs for the 12-week period ending February 19th or March 19th, decided by the loan recipient, and ending in June 30th of 19.
Okay. One question here. What is included in the term utilities? Gas, electric, phone, cable? Is there a list somewhere of what would qualify as utilities?
It does not get that granular and specific about utilities. That's something that I can take as a takeaway, and I'll be more than happy to research that, and then I can get that information to you, and I'm assuming that you can get that back out to people.
Okay, we will absolutely share that out, that answer when we get that.
Troy, I found one piece of information. It says payments on utilities. It does reference these specific ones. It says electricity, gas, water, transportation, telephone, or internet.
Okay. Hopefully that helps answer that question there. There are some questions about the timing. Is there a concern that the funds will be gone before they get a chance to apply?
Well, the applications are through June 30th, and we have been told that, if this first tranche of funds gets depleted, that they'll go back to Congress to get a second tranche, a third tranche, or whatever. So we do not believe that will be the case.
I know you talked about this already, but if you could, what are the terms expected to be for those funds that are not forgiven?
It would be paid over a 2-year period at 1%.
Okay. When it comes to, looks like a seasonal employer, I will not be operational until I get new jobs in July and August. So I'd like for my staff to be unemployed until then. Can I still get this CARES Act so I have funds to pay them when they come back in June?
The spirit and the intent of this is that you will pay them now. That is a unique situation, and again, I don't want to give misinformation about that. So why don't we put that on the side, and that's something that I'll have to get more clarification on.
And Phil has talked about this a little bit. The Better Business Bureau doesn't qualify, but what are the rules for nonprofits? Because there's C6s, there's C3s. What qualifies and what doesn't here?
Well, I read as far as what qualifies from an eligibility standpoint. So it's 501c3s with fewer than 500 employees. And then the other is 501c19, veteran organizations that meet SBA standards, size standards. Those are the only two that I have in the information that I have currently available. I do know that there has been a plethora of other documents that have asked about religious institutions and other institutions. Are they eligible or not? And we're still waiting to get clarification. As Phil said, I think we're flying in a plane that we're building right now. So more to come on that.
Okay, here's a question from a business that she says, we have two different closely related companies with separate names and separate EIN numbers, and both owned by the same person. Do we file these as two separate PPP loans?
Yes, separate loans with the separate EIN numbers.
Are payments to independent contractors considered the same as payments to employees?
Yes.
So Gary, there's your answer for that question. Can you apply for the EIDL also? So can you apply for more than one of these loans?
You can, but you can't double dip. So if you're applying for the the PPP loan and the EIDL, you cannot use them both for the same purpose. So you might apply for the EIDL loan for some working capital, but you can't use those funds also for payroll purposes.
We're getting questions about when the 8-week period starts on this. So is it from the date you get the money? Is it from the date you apply for the loan? How's the timeline work on that?
From the date that you get the proceeds of the loan.
All right.
So when you actually get the money, that's when the 8 weeks starts, not from application. Because as I previously indicated, we don't know exactly how long the application process is going to be.
All right, one question talks about an employer now who has employees, would like to apply for this, but worries that business will slow down and they won't be able to sustain that employment going forward.
Okay. And so as long
Go ahead.
as they've used those funds to pay those employees for that time period, then they can, give the documentation to show that 75% of the proceeds are used to keep those employees working at that business, and then ask for forgiveness on that loan portion.
One question is, I'm the owner broker of a real estate office. Am I eligible?
So is he the sole owner?
It is not clear in the question real quick if they're the sole owner. My guess is it's probably an individual.
Okay. If he, and again, there are salary restrictions as far as how much he would be eligible for, but again, it does say sole proprietors. So again, I don't know what kind of entity he has. If he's a sole proprietor, he should be able to apply for it.
Okay. Will Fifth Third help new customers for one of the EIDL or Express Bridge loan programs, or is that for existing clients only?
At this current time, we are looking at our existing customers. With that said, we do realize that there are certain financial institutions that are either a non-certified SBA lender or are not participating in the program. And we are not going to turn those individuals away. However, it will be a longer process under the U.S. Patriot Act. Know your customer and all the other due diligence that would need to go into that process will take longer because we would need to go through that whole documentation process and open up the checking accounts, because that's how it's going to be funded and everything else. So I will tell you, though, our main focus is on our current client base at this point in time, but we won't turn somebody away that their financial institution is not participating.
This one comes from a medical office. Our office just had a doctor leave our practice, so our payroll has gone down as of March 26th, and we are not replacing her. Should we deduct her payroll amount from our application?
Yes.
Okay. One question about the employees. Do we pay a full 40-hour week for every employee? How do the hours work on that?
It depends on how they were being paid previously. So they're going to do their payroll calculation based on the historical data. So if they had a bunch of part-time employees, that's the number that they're going to use to do the calculation of 2.5 times what the payroll would be.
Okay. A similar question. What about new hires that happened for this year? They were not on the payroll last year.
So this is somebody that was hired as of January 1, January 2 of 2020.
Yeah. How do you factor in recent hires into this?
I don't want to guess at it. Let's put that over to the side. So, and I'll get back on that. Because the goal is to keep the employees you have, bring back employees that maybe you laid off. I don't see anything that addresses new employees because we're going to look at historical data as it relates to what their payroll was. So I want to make sure I get clarification on that, and I will get you an answer on that as well.
Okay. A question is, how do I as a sole proprietor use the funds to pay my wages when all earnings go through my personal bank account?
Actually, they talk about that. I was just on a conference call about that. So if you're a Fifth Third customer, you would make an application on the our portal, through your individual, and then you put your business information showing that you are working as a DBA, sole proprietor, and it would run through their personal account.
Okay. Looks like, go ahead.
I didn't say anything.
Oh, I'm sorry. I thought I heard something. If I have a partnership and my income flows through my K-1 tax return as self-employment income, is that the number I use as payroll?
Yes, that's the number they're going to use.
All right. And do they list themselves as an employee?
Are they getting payroll?
I would guess that they would be, I guess they would be the employee then in this scenario, right? As a sole proprietor?
Yeah, if they are an employee and they're getting a paycheck, then yes.
If we have most of staff laid off now and will be laid off projected until sometime in May, should we wait to originate a PPP loan until we bring folks back in terms of having greatest likelihood of forgiveness?
They anticipate they're going to be laid off until May. Is that correct?
That's, yeah, if the question is basically, should I wait to apply so that it gets me coverage closer to when I bring them back, want to bring them back? Is there a benefit in waiting to apply to get these funds and bringing them back later?
In that particular situation, and I don't want to misadvise, but it does sound as though it would be advantageous to wait. If they anticipate they're going to bring everybody back in May, we're in the beginning of April. I don't know how long the application, the approval, and the funding process would be, but you probably wait towards the end of April. Yeah, towards the end of the month to do it. I would strongly encourage whoever that asked that question is to start gathering all the information now and get it all ready, so that once they know exactly when they're going to hire those individuals back, that they can make application immediately, because they'll have all the information together that they'll need to do that.
If an employer applied for state assistance in the state loan program, is that the same as applying for the federal assistance? How do those work together?
So was that under the State Disaster Recovery Act?
Yeah, there's the recent loan program that the state put out, it appears.
Yeah, this is a separate program. So this is specifically under the PPP, is specifically for payroll purposes, and the state's is not.
Okay. What if, and we see this a lot with businesses right now, what if an employee decides to quarantine and voluntarily leaves for 2 to 3 weeks, but we offered to keep them working? How will that work with the loan amounts?
If they were on the payroll for the last year, when they're going to do their calculation, then they would be included in that calculation.
All right, so a question here. What was the program you mentioned before, the 7A program?
Yeah, the SBA 7A.
Yeah, so what is that program?
That's just an SBA guarantee program. So if anybody has a loan, a 7A program, it's just an SBA loan that has a guarantee to it. It gives more flexible terms, longer amortizations, up to 25 years. It does have a government guarantee component to it. If somebody's applied for that, historically, financial institution would look to utilize that to, number one, give a longer, more flexible amortization. That program, unlike these programs, did require a personal guarantee, any and all available collateral that would be taken on it. A lot of times that program was utilized for a projection-based, maybe a startup, or if somebody had acquired a business that had a lot of goodwill in it, so there wasn't enough collateral to support the loan. But that's the program, and that's what its intended use was. And so if somebody has that type of loan today, they will know that they have that. If somebody is interested in that type of loan, again, consult your financial institution, or you can contact us, and we're more than happy to talk to you about a new 7A loan.
Question, and I believe we've touched on it, but if you recently placed your workers on a temporary layoff and they've already filed for unemployment, the goal of this is to bring them back into the workplace, right? And not have them sit on unemployment. That's the goal of this, right?
That's correct.
So yes, the question there, the answer there is yes, you are anticipated to bring them back.
Correct.
One question that comes up is for employees who earn more than $100,000, are their wages up to $100,000 included in the calculation, or are all of their wages excluded?
No, it's capped at $100,000. So if somebody makes $125,000 a year, then it would be capped at $100,000.
Okay. This is a person whose company purchased a new company December 1st that came with employees. Can we not use those additional salaries to establish payroll totals?
So when did they acquire this company?
December 1st.
December 1st. Well, and again, I don't know what type of information that they have for the prior period. I would think that they would be able to include those in there, but again, that would be something that they would have to get all that financial information. I'm assuming if they acquired that business, they had access to that financial information prior to the acquisition, so that they could put that in there. But that would also have to be a determination of the SBA as it relates to the eligibility on it. But I would think they would be able to do that as long as they could validate what the payroll costs were for that previous business that they acquired.
Are board members considered owners according to the application?
No. Not unless they actually have ownership interest in the company.
Okay. And then how does this affect independent reps paid 100% by commission?
So it does say that individuals are eligible to apply for this type of loan.
Okay. Looking at going back, there's a question. This company has bookkeepers on contract that are contract employees. They would count towards the payroll on this.
That's correct.
Hey, Eric, I was just kind of reading through the, any independent contractors have to file themselves, I think.
Yeah, it says any who operates as an independent contractor is eligible.
But the independent contractor has to apply themselves. The employer of that independent contractor cannot, I think. Yeah.
That's correct. I'm sorry if I wasn't clear on that.
Is there a concern about bringing employees, using this money to bring employees back if there's not work to keep them busy?
You can bring employees back, and then I guess it's up to the employer to make a determination on what they want them to do.
Here's someone who says they gave their employees a raise in January. Can I use the 2020 year-to-date average payroll expense instead of the average from 2019?
Well, what it says here is it's for 2019.
All right. And then what, if you could, we're getting a lot of questions about the timeline. What kind of timeline is Fifth Third Bank looking at again on this?
As far as when we're going to launch the program,
Yes.
sometime next week. I was just on a call prior to this, and again, because of all the changes, it's a very fluid situation. Somebody asked specifically, tell me what day we're going to start the program, and they were very reluctant to give a specific date because if we told you whatever day and we didn't meet that, we didn't want to do that. So it would be sometime next week. I know that's not the answer you want, but that's where we're at this point in time.
So one of the questions is for employees who are at home due to non-essential business stay-at-home order. The goal here is to bring them back into some kind of employment, even though they're working from home.
Oh, absolutely. I'm working from home. So yeah, I mean, the Payroll Protection Program is a way for a business owner to get funds to ensure that they can continue to keep those employees working wherever they might be. If they're working from home, this is a way to get funds, and as long as those funds are used to keep those individuals employed, and they can document that, then after the time period, they can ask for debt forgiveness on it.
All right, we are coming up on 3 o'clock, so I'm going to pass this back over to Phil.
Thank you, Eric. We really appreciate your willingness to kind of throw yourselves out to the lions when the rules were put in place last night. But thank you so much.
Oh, you're quite welcome. And again, this is a very fluid situation, and for those that are, in the workplace and looking to, maintain payrolls and keep people employed, we're doing everything in our power to make this seamless and expeditious process. As soon as we have this program up and running, we will definitely update our website. We will have a communication that will go out so that people can apply. They can know what documentation they'll need, what type of certifications that they'll need, so that we can get money into the hands of the business owners as soon as possible.
Well, thank you so much, and I think it's a sign of the principles and the character that you and Fifth Third have, that you want to make sure you got it all right before you open the floodgates. So thanks again. I'm going to talk now about some of our upcoming webinars that are so important right now. Employment law, particularly unemployment, but all things about COVID-19. We have a webinar next Tuesday, April 7th at 11 a.m. with two attorneys from Miller Johnson with great expertise in these areas. Troy has been working with a representative of the Small Business Association to come and provide further guidance next week when they think they're ready. And then something that most of us haven't had time to do that you now may have time to do, and that is take advantage of the programs that you have through your BBB accreditation. I think particularly about our eQuotes program, which provides you leads for people that want to do business with you, and the free customer review app. And we have other things too. So we're having a webinar next Thursday, April 9th at 1 o'clock, where we'll explain how you can maximize your value that you're getting for your BBB accreditation. And we just want to thank you from the bottom of our hearts for being BBB accredited businesses. We're going to try to be there for you every step of the way. And we hope that we all make it through this and come out stronger on the other end. And we hope you have a great weekend.